Hey everyone, welcome and welcome back to my channel once again. This is Abhishek, your friend but not a financial advisor, and I'm sorry for not posting any videos for more than a week. I was away from YouTube because I had some other priorities to fulfill, and these priorities were quite important for me at this moment. Anyway, so I'm back here once again, and that's what matters, with an amazing penny stock to get some gains going. So without further ado, let's just jump right into it. So guys, the stock which we are going to talk about today is Farmi, trading with the ticker symbol FMAI, and of course is a Chinese company, but don't bother about that anymore because here we are looking for some quick gains. So don't see this 24% gain now. Of course, me and my patrons, we picked up this stock before this 24% gain. Yes, we did it. But sorry guys, I'm a bit late on YouTube because on Patreons I just put the stock as soon as I get some information, but to make a YouTube video I need some time. But again, it's not late, and you will see further in this video why I am saying so. So don't look at this 24% raise, just look at this. So there was this sharp downfall because of a direct offering, and we will get onto that in a few moments. So you can see that it has fallen really sharply, and that's why it's a good time to actually pick up this stock and get some really good gains. And why I'm saying so, well, you will see further in this video as well that if the price won't go back to this level, to 81 cents or to $1, then of course it has the potential to get back to a certain level, which we will see further in this video. So stay tuned until the end of this video to know why I am saying so. So anyways, let's move on to the reason why it fell so sharply. So the reason why the share prices fell so sharply for Farmi is because of this thing right here. So Farmi prices $42 million upsized underwritten public offering of ordinary shares. So they did a direct offering of around 140 million shares at a price of 30 cents per share. And the company intends to use these net proceeds from this offering for working capital, of course, and general corporate purposes. And that was the reason of this drastic downfall. But the good thing here is that the closing of the offering is expected to occur on May 3rd, which is today, on Monday. And that means that when we move further in this video, I will show you the price target which I'm expecting, and that is a conservative price target, to be honest. But I do expect that the price might return to that level at least. So now let's move ahead. So guys, before we jump onto the technical analysis, I would just like to clarify one thing, that when I say that the price target will reach, don't misunderstand this statement. So don't think that the price target which I expect, it will reach in one day. No. Yeah, so the share offering is supposed to close on Monday. Yeah, so there could be huge volatility. So the price might open in positive +5, +10, +15%, or even it could eventually come down to a negative percentage. So this volatility will be there. So please be careful, but eventually it will come onto that target. It could be in 1 week, 2 weeks, but it definitely will. So be patient and be careful, and don't misunderstand any of my statements as in a financial advice. Okay guys, so here we are on the technical chart of Farmi. So just to give you guys an overview about Farmi's technical performance and stock price performance over the past weeks and months. So here we are on the daily chart, and as you can see right here that Farmi was actually performing quite nicely over the past few months, and you can see that these high price spikes, and all the time this new resistance was formed, and yes, then it was moving sideways, consolidating sideways, but we can see that overall the channel, the growth of the price was quite stable, and all these times that there were new higher highs forming up, and then we had this amazing spike in the price of $2.5, approximately $2.4, which was all-time highs, and then we had a big downtrend, and then again we had this amazing spike in the price once again, but then the offering came and the price went down like hell, down the hill up to almost 30 cents, because the offering was done at 30 cents. Now coming on to some basics, so we can see that price is now below 200-day moving average, the exponential, 20-day moving average, and the 50-day simple moving average. So it is under huge selling pressure because of the offering, and this is in oversold territory. There is no rocket science to see or to learn that. It is in oversold territory, and we can see this the same effect from the RSI. RSI is below 30, but as you can see that the RSI is curling back up so from the oversold territory, and we had the same effect as you can see in 2020. It was in the oversold territory once again, but then after that it went back quite nicely. So, and this is what I expect again, that what might happen when the market opens up. And also we can see that in the volume there is a huge green spike, so this is why the stock price went up by 25%. And that's why I do think that the stock price will, if not above $1, will definitely hit 70 cents to 80 cents. And why I think so? Because of some calculations. So I will show you in a moment some calculations why I think that Farmi is going to hit or might definitely hit that 60 to 70 cent range. And that means that we still have an upside potential of over 50% on this particular company from the price where it is at right now. But guys, remember that that's the most conservative approach I'm taking to get Farmi onto that range of 60 to 70 cents. Why? We will see that in a moment. So let's move on. And this is why I wanted to bring this stock up to your attention, because this stock has huge potential and has a good potential in the coming days, especially after this direct offering at 30 cents. Okay guys, so here we are, and this is how I think that we still have an upside potential for Farmi of over 100%. So I would not explain everything in detail because that might make this video quite long, and this is just to show you guys that why and how I do some intrinsic value calculations for some small companies. Usually I also use discounted cash flow method, but for such small cap growth companies I really cannot predict the future cash flow, and that's why that would give me a really wrong intrinsic value in this case. That's why I would be using earnings per share, and this earnings per share we can easily see from Yahoo Finance. So as you can see right here guys, that the price to earnings ratio for the trailing 12-month period was approximately 8.92, so let's say 9, and the earnings per share is 0.05. So like we already saw that from Yahoo Finance, we have an earnings per share of approximately 0.05 for Farmi. And now for the next 5 years, let's say we have a growth rate of 5% to be conservative. And why? So just to give you guys a brief overview that why I'm taking here 5%, because the average year-over-year growth rate for Farmi is approximately 3.43%. But on the other hand, if we take the revenue growth from 2017 and 2018, so let me pull up the calculator quite fast, and if I divide the revenue from 2018 by 2017, I still have a revenue growth, year-over-year growth of approximately 11%. But then we saw that the revenue growth was not that nice. Yeah, it was quite just stagnant. So that's why I'm taking 5%. But we can see right here that Farmi do have the potential to have such a growth of over 10%. But to keep things conservative, we will keep it to be at 5%, and that's why we put for next 5 years growth rate of approximately 5%. And after that I would still keep just 5% to keep things simple. And the discount rate, we can take the 10-year treasury yield, but in this case I will keep 10% because that's what I expect my return to be on my investment. And now the terminal multiple here, in this case I will take the price to earnings ratio, which is approximately 10. We already saw that the price to earnings ratio for Farmi is approximately 8, but Farmi had in the past a price to earnings ratio of over 10. But here I'm keeping things quite conservative, just to give you guys a brief overview that even with the most conservative approach, we still have an upside potential of over 100% for this particular company. So here we have the intrinsic value of 69 cents, and that's the reason why I said that I still see this company reaching 70 cents in the coming few weeks. And this is just to keep things quite conservative. Now let's just play with some numbers quickly. So let's assume that in next 5 years we have a growth rate of 10%, which we already saw that it had in 2018, from 2018 till 2019. And then let's say, okay, we still have Farmi can perform quite good and keep 5% growth rate after those years. And then we have a discount rate of, let's say, 12%. Yeah, still keeping it below the 10-year yield. And then we have a terminal multiple of over 20, because that's what I think that that would be quite justified. Yeah. Then we have an intrinsic value of over $1. So this is like still in a normal case scenario. not conservative, but a normal case scenario. So we see that we still have a huge upside potential for this particular company, and I will definitely explain this particular method in for you guys in my next video, but this was just to keep things short. But I hope that this is quite understandable, and yeah, there is nothing much more complicated, but I will definitely explain this in much more details in my upcoming videos, that why I use earnings per share and when I use earnings per share, and in which case I use cash flow, discounted cash flow method, and how this intrinsic value is calculated, and what are the growth rates, what is the discount rate, and what are the terminal multiples. But anyways, so yeah, here we are guys, and this is why I still think that Farmi has the potential to reach 70 cents to $1 easily. And with that guys, I will wrap up today's video. I hope you liked this video of our top penny stock to choose for this month and for the following weeks. And I will bring some more penny stocks which are at a massive dip. So stay tuned and subscribe to the channel if you haven't subscribed to the channel yet, and don't forget to press that notification bell icon to get such videos on time, and so that you don't miss the chance to grab on those companies as soon as you get the information. Of course, do your own due diligence before jumping into any particular company, because that's really important. Don't listen to me or to any other YouTuber out there. Use the information up to your benefit. And if you liked this video, then definitely please hit that like button. And of course, if you want to get these updates before YouTube, then you are most welcome to join our Patreons community. And yeah, the link will be in the description down below. And if you have any suggestions for me to make any other videos, then don't hesitate to use the comment section down below. And with that being said, I will wrap up and I will see you in the next one, guys. Till then, stay safe, stay healthy, and ciao.